And Emily, I was talking to somebody last week about, remember the TIP ETF? I know, Scarlett, you know the TIP ETF. And that was all the rage. Don't look at what it's done over the last few months because it's basically just been a complete dog. And I am curious that Emily, when people are picking out stocks, the idea here is they were trying to find stocks with less exposure to some of those currency swings. Are they still doing that?
No. According to the flow picture, but they actually haven't really been doing it all year when you look at the currency hedged space. So we did see last week BlackRock's HIFA ETF had its biggest one-day decrease since about 2018. So again, maybe some thoughts about we've hit peak dollar. I don't want to be in a currency hedged ETF. But all year we've had this really strong dollar, but currency hedged ETFs for US-based investors haven't really seen a lot of flows. In prior cycles of dollar highs, like back in 2015, we were seeing billions flow into currency hedged ETFs, and this year we haven't even crossed about 300 million.
So what's the explanation for why people are not entranced by currency hedged ETFs anymore?
I have been asking so many ETF sources this for months now. I've found a few different reasons. One of them is some investors just don't want to invest in international equities, so they're US based, they just want to stay in the US. And then another one is that the timing of the trade back in 2015 really seemed to hurt a lot of ETF investors because the flows into currency hedged ETFs came after the peak in the dollar. So it seemed like it was really poorly timed. I was talking to the folks at Bloomberg Intelligence, and they said this kind of happens in ETF land where if traders get crushed by a poorly timed trade, they just don't want anything to do with it.
Burned once and they don't want to go near it.
Yeah, so we're seeing that a little bit in the space. But a lot of the hedged ETFs have outperformed their unhedged peers. So now, if you did get in.
But now we're starting to hear from a lot of the strategists on Wall Street who seem to be calling that peak in the dollar. There was a great note by Goldman really talking about this idea that basically the best days are behind it. That doesn't necessarily mean it's going to collapse, but the idea that now you're going to start to see those pairs maybe favoring some of the Asian currencies, I think was what Goldman singled out here. Is there a sense here that the movement in the dollar, or rather the potential peak, that is a direct correlation to expectations about what the Fed is doing?
Yeah, I mean, certainly this year, you think about that dollar trade seemed to catch people off guard. You look at what the expectations were for Fed tightening in January of this year. People were maybe pricing in 3 25 basis point rate hikes, and look at what we've had, much more than that. And so we've seen that dollar higher. And we also just saw a lot of other currencies like the yen really catch people off guard. I don't think anyone would have expected to see like dollar yen at 150, let alone 130.
I think a lot of people also thought the Japanese authorities were going to intervene at some point and are maybe a little bit surprised that it hasn't been more effective if they have.
Well, they did, though, and it wasn't effective.
Well, that's the
issue. Okay.
I want to get back to HIFA for a second because you had mentioned it's still down. It saw this one-day drain, but it's still down about 5% year to date. So given that this is the end of the year, there might be some positioning around that. Can you talk us through that?
Yes, so there is some speculation that maybe the outflow had to do with tax loss harvesting, which we tend to see at the end of the year. Institutions and also retail investors will sell a fund or a position at a loss to offset a gain. So the fund is down about 5%. It is considered ripe for tax loss harvesting. It's kind of hard to tell, like if you don't speak to the person who actually sold the position, what's behind it, but there is some speculation that there was that going on.
Are a lot of the folks you're talking to, are they sort of making some of these decisions, whether entry points or exit points? I mean, let's put tax loss harvesting aside. Are they making these decisions based on fundamental reads, macro reads, or are they looking at more of the technical levels?
It's a macro read. The ETF investors who I spoke to who did want to invest in currency hedge ETFs take a macro view. I spoke to a lot of other sources, though, that said it's too complicated. They don't want to make a bet on currencies and equities. So that's another reason why they just avoided the space entirely.
So you've been on top of stories that are kind of in the zeitgeist. What else are you taking a look at in your coverage of cross assets?
Well, certainly that peak dollar story, because we saw the CFTC positioning data from last week showing that investors are still getting short the dollar. But I'm paying attention to, like, have we reached peak dollar? Does it have to do with peak hawkishness? Or are we just going to get crushed again in, a month from now when we see the Fed continuing to be more hawkish? So I'm a little hesitant. I think my sources are too, of calling a peak in anything.
Right. No one wants to be timing things incorrectly.